The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. Hope you all had a great long weekend out there. Back in action on Tuesday, and we jump right back into it. We have a non-farm payroll report out Friday morning, 8:30 for the month of August, and then 2 weeks from tomorrow, we get the first planned Fed cut. That's if you ask the market. Seems like that's how things are lining up. We do have the data point on Friday for the non-farm payrolls to get over. We'll see how that goes. But nonetheless, you got markets picking things up. First trading day of September, slightly in the red. We roll over at about 3:30 in the morning last night. I was taking a look at the futures last night. Now, futures technically traded Sunday. We're closed on Monday. You make it to a high of 56.69. You were positive by 10 points or so, back up there at 3:30. Then you get a little bit of a sell-off when we have Europe open at about 3:30, right? Europe is lower this morning. You get the DAX down about 0.4%. FTSE down 0.6%. CAC roll down about 0.2%. Over in Asia, some mixed markets. We get Asia. You get the Nikkei basically flat. Hang Seng down about 0.2% over there, and our markets slightly in the red. S&P's off by about 0.6%, trading at 56.29. We'll put it back to a 5-minute chart. You get the NASDAQ 100. We're off 142 points, 19,481 right now. Dow's off 215 points. That's about 0.5%, 41,438. And the Russell down almost a full percent. You see the trade on the Russell, right? Particularly volatile from 2220 down to 2200 on the dot. We got some action in crude. How about it? Hopefully you didn't fill up yet from that Labor Day trip, because we got cheaper prices coming at you with crude. How about it? 71.54. You take a look at the daily. Critical level. Right back to where we were. 71.46 was the low on August 21st. We have a low of 71.51 right now. We're basically at that low. And then you get a low on August 5th of 71.67. So challenging those lows right now in the crude market. As we come into September trading, we might get a 69 handle on that crude contract. Remarkable, especially in the face of what everything else costs. If you compare crude, right, you compare in terms of inflation, dollar doesn't buy what it used to, and you're still buying gas at $3, which is remarkable. Gold contract, a little bit of volatility as well. Check out gold. Gold right now basically flat. But you trade from 25.37 down to 25.16. We're back to 25.28 right now for that gold contract, and we jump to notes and bonds. And this is what's driving some of the action right now. You got a little bit of higher price and lower yield. We got the 10-year up 10 ticks right now. We're up 15 ticks from where we were at 8:30. Look at this run, right? You get the 10-year yield, 3.86%. And you get the 30-year up 27 ticks. That's a move for you, man. Getting back everything that happened on Friday. Look at that 30-year. It's up almost a full point. Yeah, a full point from where we were just trading at 820. Remarkable. What's going on in that bond market in the last 30 minutes or so? If anybody knows, let me know. We got a little bit of volatility to kick things off on Tuesday. You jump over to the VIX. Volatility index right now sitting at 1657. A little bit of elevated VIX as we get some negative market action. You know, I was looking at this morning. I'm going to kick it off with this, with a little bit of VIX comparison. So the VIX. We'll go back to the VIX for a second. A nice rule. They call it the rule of 16. Okay, if you're not familiar, if the VIX is trading at 16, it means that it is pricing in, we'll put it on a 20-day. It's pricing in a move in the S&Ps of about 1% every 1 out of 3 days. That's the volatility that it's pricing in with the VIX being at about 16. You're at 1657, okay? But it is intriguing. Now, that's supposed to be either direction, too. But the reason why that really goes there is because people are protecting to the downside usually, okay? So it's downside is where you get that action. But just for a second, take a look at even the 10-day, 30 minutes. This is only going back 10 days. Okay, so in theory, if the VIX was at 16, you should get a 1 out of 3 chance on a daily basis that the VIX is going to move at least 1%. All right, at least 1% is how they do it. Now, if you double that, the VIX gets to 32, then you have a 1 out of 3 times that the VIX is going to change 2%, okay? You add 16 again, you go to 48, so you go from 16 to 48. It's still a 1 out of 3 chance, but it's the rule of 16, but that means that you have at least a 1 out of 3 chance that the market's going to move at least 3%. So that's why when you start getting up to these ridiculous levels in the VIX where we get a real fear spike like we did on August 5th, okay, when you get the VIX up to 65, that is pricing in a move of at least 4% 1 out of 3 days, okay? But going back here, and I just want to illustrate how much this market really is moving, okay? You go back to just the S&P. So this morning we're down 0.6% right now. But look how often we've had rallies or declines of 60 points. You don't have to go back far. Where do we have to go back? Well, Friday we had a sell-off of about 50 points almost, right? Just zooming in on Friday. You had a high of 56.46 and a low. Yeah, you traded down 50 points. Okay, 56 would have been 1%. So you had a 1% decline on Friday. These are just intraday moves. So it's a little bit different than the VIX protecting you on fear. But there's your almost 1% move on Friday. On Thursday, you did a 1% move. We sold off from 56.60 to below 5600 briefly. Jeez, that was Friday. That's Thursday. Wednesday, you had quite the sell-off as well, right? 56.50 all the way down almost to 55.60. That was 100 points, I think, was that one on Wednesday. So we did 50 points down on Friday. You did 60 points down on Thursday at one point. We had almost 100 down points on Wednesday of last week. We calmed things a bit on Tuesday. You go to last Monday, and we had a move of about 50 points again from a high. I mean, these are just huge moves. So don't be lulled. That's kind of the point here to get to it, right? You can see the moves. Then you go back a week and a half ago. You had a move of 80 points on the S&Ps, right? You go back to August 21st. We had a move about 40. There are huge moves in this market left and right, okay? The VIX sitting at 16, yeah, probably appropriately priced, but I just wanted to demonstrate you how often this market is ripping in both directions 1%. It's happening yet again this morning. We're down by 40 points from where we were trading at about 4 in the morning right now. And we're down with some movement in the things that are usually driving this, as in, what do we have? What do we have going on right now? Well, what we have going on is the movement in notes and bonds and a little bit of dollar movement to follow it up, and that's driving everything right now with. Look at that move. We're almost at 114 in the 10-year right now. That's pulling yields back a bit. And when you pull yields back a bit, what's that going to do? That's going to add a little bit of weakness in the dollar from 101.86 to 101.68. And when you get weakness in the dollar, that's actually going to help some of the commodities. And that's where you've seen some of the volatility here. Weakness in the dollar, and you've seen gold bounce back a bit. We were at 25.17. We're at 25.26. You're basically flat on the session, but we were all the way up to 25.37 in that market. Yeah, so we got some volatility, man, going across the board. All right, we jump into some of the Magnificent Seven. As we come back, we'll take a look at some of the other equities we got going on this morning. You got Amazon slightly in the red with the whole market this morning. We got Amazon trading at 177.41. Quite a run for them on Friday. The big dog, Apple. So Apple, next Monday, they launch their new iPhones. So it'll be interesting to see how the market positions itself ahead of that big event. September 9th is that event for Apple. Remember, Apple, they're slightly in the red as well. Stay tuned, folks. We have lots to talk about on Tuesday after Labor Day. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the market basically at session lows right now. S&P is off almost 35 points right now. We're trading at 56.27 as we come into a pretty important week. So we got non-farm payrolls on Friday. We got ADP private payrolls tomorrow morning. So that's a little precursor to the main event for the data on Friday. We'll see where we go from there. But this morning, we got a little bit of negative market action, and especially interesting in terms of the move we got going on right now for yields, as it's just continuing to spike, man. We got higher price and lower yield coming at you right now. You're talking about the 10-year now under 3.85%. Yeah, under 3.85% as we get over that price level. We take a look at the CME FedWatch tool. As I said, 2 weeks from tomorrow is the September meeting, and there's your market. 2-to-1 chance that we're going 25 basis points, 100% chance that we're going for a cut. How about that, right? They make it pretty simple. Yeah, on Friday, that was as high as 70% chance. I guess it was a 25 basis point cut. Pretty remarkable. You go back a month ago, and the market was sure that they were going 50. 74% chance a month ago that the Fed was going to cut 50 basis points. Now only 26% chance. The market keeps getting ahead of itself. Now, we fast forward to December. These are the ones I find more intriguing, right? And look at how the market was ahead of itself again. And that's where, it is interesting to see where it is right now, but it's also intriguing to see, which I love, how they give you where this market was a month ago. On August 2nd, okay, the market had a 50% chance by the time we got to December, there were basically going to be 5 quarter-point cuts in, right? Because we were going to have to go from 5.25 to 5.5 all the way to 4 to 4.25. There's a 50% chance that was going to happen. Now that chance is only down to 24%. And they even anticipated that there was a 13% chance that we would be down a whole 1.5 by the December meeting. That's only a 4% chance now. You add those two up, you're only at 28%, when that number combined was at 62%. Just mammoth. That's only a month from August 2nd. So be aware the Holy Grail has not been written yet when it comes to where the Fed is going to be, how they're going to cut, how they're going to do it. The market has gotten ahead of itself before. Yes, they are going to begin cutting, okay? There could always be a shocker on Friday. Anything can happen prior to the date of itself, okay? But all things considered, unless there's a huge shock somewhere along the line in the next 15 days, the Fed is going to begin cutting. They're probably going to do it with 25 basis points. And then they're going to keep going and allow the data to guide them to go from there. And they're probably going to be on that path unless they see some worrisome data on either side, right? They see some worrisome data that they're late to the party. The jobs numbers aren't doing well. There's lag. They may ramp up the acceleration. They see some data on the other side of that, which is that when they begin to cut, and this is why they want to be cautious, okay? They want to see what's going to happen when they begin to cut. Interest rates start coming down. The cost of capital starts coming down, mortgage rates start coming down, car loan payments start coming down, the ability to refinance becomes easier. You can access that equity you have in your home that you haven't been able to refinance for an extended period of time of 2 to 3 years since rates have been high. That frees up capital, right? They're worried that if they cut too quickly, inflation can come back. They're more worried right now about the market, right? The risks of not cutting are starting to outweigh the risks of inflation, or something like that is how Chapman put it. All right, but nonetheless, right now though, for the meeting coming up in 15 days, the market's saying 2-to-1 probability we're cutting by 25 basis points. You go out to the November meeting, and the market is saying, and this is what's remarkable, that there's almost a 50% chance that they'll cut 50 basis points either this meeting or next, right? And somehow there's an outlier. There's a 12% chance that everything is breaking down by then and they need to cut by a full point. Just remember that too. There's some real tail risks being represented in this chart that they could be late to the party. That's where people are lining up their risks, okay? They're lining up their hedges to make sure they're buying some of that insurance to make sure that if they are late to the party, okay, and that's why you're seeing some of this volatility in the S&Ps. People are a little worried with where we are in this market. We're priced for, and I don't want to call it perfection, okay, but the market's priced pretty well right now at a price point of 5,600. When there's some worry that the underlying economy is weakening a bit. We get a big number on Friday. We find out where we go from there, right? All right. What else we got going on? Yeah, we talked about the data we got coming down the line. They got an article here pulled up talking about data slated for the week. As I mentioned, we got ADP private payrolls tomorrow. We got non-farm for the month of August on Friday. And let's jump around. Let's talk a little bit of Morgan Stanley's Wilson. Strong jobs data could fuel gains. Yeah. But signs of a hard landing present a big downside risk to the S&P 500. Now, he had been a bear for a while and has been wrong for an extended period of time when this market has been resilient for all things considered. But you have to give it some credence because I agree that there's a lot of volatility with where stocks are priced, okay? Now, he had talked about last month's correction, but in fairness to that, man, that correction existed for 3 days till the market got it back, so it really doesn't even count. Stronger than expected payrolls number, likely going to give greater confidence that the risks have subsided, but the risks are still there, and that's what you want to keep your eye on, all right? Market breadth is improving. Relative performance of the S&P 500 equal weighted, right? Look at this equal weighted relative to the S&P 500. Quite an underperformance since where we've been in 2022, 23. It's all been the Magnificent Seven. Can they carry it forward? Well, we're going to get to find out, man. We are going to get to find out. And yeah, they go over what would be ideal. What would be ideal is that the economy has a soft landing or no landing at all, right? Everything's great. Inflation has subsided. And the Fed can slowly move rates back to a little bit more accommodative to make sure it's not too tight. That's the sweet spot, okay? The problem is, are they going to have that much time? Can they really keep rates at 5.25% to 5.5% where they are right now? When they cut them in September, they're only going down to 5 to 5.25%. that is still going to be restrictive. Can they be that slow? Is the economy that resilient where they can go that slow, make sure they don't push inflation back higher? And that's what we're going to get to find out. And we get the first data point on Friday, and we get to see. All right, what else we got going on? Yeah, this one got me thinking. So this one's an article from Tesla, from CNBC, and I would agree. No matter if you like it or you don't, it's in a category of its own. It is in a category of its own, the Cybertruck, right? Everyone kind of sees it on the road. We got a lot of them in Florida. Not surprising for some reason, but I've seen many of them out on the roads. And I would only buy one if money's not a problem, folks, because it seems like they're pretty cool. Okay, they're new. They're not made in the best way possible. I've seen a lot of videos of just the way they're constructed. Not exactly ideal compared to how you have most cars in terms of the durability. And the next thing you got to worry about is replacement parts and insurance. We'll finish that one up when we get back, folks. We'll talk about that. We're going to talk some equities. We got a lot to talk about. Don't go away.
Consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the stock market open. We got the S&P down about 33 points to kick off the trading month. First trading day of September. We've been chopping around these price levels since about 5 in the morning. We're trading right now at 56.28. You get the NASDAQ 100 down 165 right now. Dow off 180 and the Russell off by 19. We check back in on commodities. Gold down by about $4, $25.23. You got silver down 50 pennies. You know what's interesting, folks? I'll tell you this. For you tigers and tigresses, and been out there a while, I was doing a little bit of cleaning recently. Silver. Great Panther silver. Can we see that? Who's still got their Great Panther silver? This is a great promotion. They were sponsored a while back. I got to show my dad this too. And they have Great Panther silver, and we were giving these out for a long time for contests and stuff. Pretty cool. Great Panther silver. Anyway, I found that last night cleaning some of the stuff in my house. And yeah, $28 silver. Now, take a look at silver, right? Come on, cooperate with me. Let's go, data. It's not pulling back my chart. Let's go. Come on. I was just going to show a longer term chart. Take a look at it. All right. We're not cooperating. Don't do this to me again. Think or swim. They are. They're doing it to me again. All right. Not sure if it's my... Oh, I'm getting delayed data now. Do I got a problem? All right. Let me know if you still got me. I think you do, Al, for some reason. Oh, there we are. Okay, we're back. Perfect. Silver. Yeah, there it is. I mean, pretty remarkable. You were at $17 a couple years ago, August of 22. You almost double in price, up to $32. You take a look at the longer term time frame on silver, though. Check it out, right? Quite the different story now. There's been a couple short squeezes on silver, but even remarkable. Make it all the way up to $50 in 2011. Quite a different chart when you compare it to gold. Silver right now, $28.69, still a recent high. Anything outside of that acceleration you had in 2011, 2012. But yeah, Great Panther silver. Let me know if any tigers, tigresses still got their Great Panther silver. I'm sure we got some out there that got some Great Panther silver hanging out. All right, what else we got going on? Yeah, this is an interesting one from Bloomberg. When's this out? This morning? Yeah, out this morning. Shorts are circling some of the AI boom's biggest question marks, right? And yeah, we were talking a lot about super micro in the den on Friday. There's super micro. You kick off the trading month flat, but it's been quite a fall from grace, man. 12.29 down to 4.36, okay? And that, what they talk about here, man, things have been swift. Super micro began last week, okay? Last week, which was probably somewhere up here, with a market cap of $36 billion, and it ended it with $26 billion. On a report from activist short seller Hindenburg Research, glaring accounting red flags, among other issues, and kickstarted a corporate governance fiasco. So they got some big issues going on there. But yeah, are they going to go after some of the other ones? They talk about Lumen Technologies in here as well. Shorts hit high-flying AI beneficiaries. Performance from trough to peak within the past 2 years. Yeah. Excuse me. This axis on the right is 1,000%. Supermicro. 2,200% performance. But guess what? The bigger they rise, the harder they fall sometimes. And yeah, they're circling, because if you don't have the money to put it out just yet, then yeah, you better watch out. You know, it's interesting. I was listening to an article. I was listening to an interview over the weekend on Bloomberg Business Week, and they were recapping some of the interviews. I listened to Jensen Huang. That was a great one from his conference call last week. But then they had a Dell officer, and I believe he was the chief technology officer and AI officer, right? This guy was all technology. It was a great interview, and they were talking about it. And he's Dell. He's talking up his own book. Of course he is, but he seemed like a bright gentleman. Forget his name, unfortunately. But the one thing that was cool that he was talking about was, you know, people compare this to the internet, right? They compare it to the dot-com bubble. Very comparable on certain aspects, right? The run-up, the growth priced in. Okay, now you don't have any of the ass.com out there and stuff like that is going on, where you just got these companies with ridiculous valuations with no money and no earnings. But what he did say was, no, it's not like that. And he said, because the difference is this is happening right now. So the dot-com bubble, the internet was big. You know, you had a ramp, though. You had a ramp of like 10 years, 15 years. You didn't have to transform the whole world overnight and start using it and start showing the beneficiaries overnight. AI is happening right now. If you're not using that right now and capitalizing over the next 6 or 12 months, you are going to get dropped to the side, because that is how quickly technology is getting implemented, used, and companies are benefiting in the current tense, not in the future. And so I found that interesting, and it makes sense. Because you think about it in that degree, right? Now, talking about Tesla. So we were talking about Tesla, right? If you're thinking about buying a Cybertruck, Tesla shares up by 2.3% right now, up $5 to $219. And this one was an interesting one. And you just want to be careful, okay? Because they're an expensive car. What are they going for? Something like $100,000 probably. But what happens is that these are not like other cars where there are parts readily available for insurance just to go get the parts, replace them, and you're on your way if something happens. There's reports, and this is a report from Tech Times, not familiar, okay, and this is out a couple months ago, but I remembered reading it, and I read it when I read this CNBC article talking about Teslas are in a class of their own. And they are in a class of their own, but that is not a good thing when it comes to replacement value for some of the parts, picking up parts and fixing your vehicle, because there's no other cars like it. You can't always get the parts. And they talk about how Tesla Cybertrucks have just started showing up in totaled auctions. And some of the reasons why they're totaled would not be totaled in other cars, but it's so expensive to fix one of these cars if you have a big problem. And one of the anecdotal, okay, things they talk about, they had in here, and just to replace their front windshield was $1,900. They talk about there's one in there that's totaled with a flood line that's above the cabin level. So what happens with rotor damage? You might even be damaged. It doesn't even make it to the cabin level. You had another one in here that had airbags deployed with 3,900 miles. That was totaled immediately. Now, if you have structural damage, that's going to happen on any car to some degree. But, yeah, $2,800 to replace a rear quarter panel, okay? Novel construction and design elements which complicate repairs. So if you're thinking about buying a Tesla out there, think about all the costs that are going to go into that Cybertruck, not just the one that's up front, because you got any problems with it, and it's going to be a problem. Yeah. All right, how about the Journal? They're talking about Americans really, not just really bullish on stocks. And yeah, it's not hard to see why when, man, it has been quite a run. Number of 401k retirement accounts at Fidelity worth at least $1 million, almost 500,000, up 31% from a year ago. Imagine that, right? 31 more millionaires than there were a year ago in their 401k in their Fidelity account. Doesn't even count what you got going on in your house as well. We talked about they start bringing down rates. You can access that equity in your home. That's going to be a stimulus. But how about the allocation to stocks as a share of financial assets? 40+%. You see where it's been. Remarkable. We are heavy on stocks right now. Folks, thanks so much for tuning in. Basil's going to jump in and finish up the program right now. I got an appointment to run to. He's coming up live right after this break. Have a great Tuesday. We'll see you tomorrow. Stay tuned for Basil, folks. Check out his...
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, we're back. Basil Chapman sitting in for Tommy. Tommy had an appointment. I'm right here. Dow was up at 41,585 on Friday. That's an all-time high. In the Chapman Wave methodology, we're always looking for at least 4 higher peaks from a buy signal. First is peak A, then a B, then if it's upgraded to a buy mode, you expect at least a C and at least a D, and then other things can happen. It can go higher. That's where you can have your sharpest decline, all sorts of things. But D is your expectation in a buy mode in the Chapman Wave methodology. So we're anticipating that there should be maybe a peak C today, no new high, but by maybe Wednesday or so, there's a sudden pop to the upside. And then we've got to be careful. Other things can happen, as I say. So that's the expectation. Let's look at the S&P. The S&P right now. So the Dow's down 171, not a big deal. It was up over 200 on Friday. That was a last last hour push to the upside, all-time high. Today you've got the S&P having made a really good recovery on Friday after being weak earlier, didn't go above the 56, 51, 62 high of 5-6 sessions ago. It got really close, but didn't make it. So 565162 was the high on the 26th, and on Friday went to 5651.37. Missed it by cents, by pennies. Anyway, we're anticipating that there will be a leg D. Now, does it go higher? Well, look, techniques that I use. The 9-period moving average over the 14 is still very strong. This is a very powerful move still to the upside in the daily. Same in the weekly, same in the monthly, same with the Dow. The QQQ a little different, not much, but a little different, because the 9-period moving average is really close to turning down in the daily, and the daily is down 5.25 at 471. It didn't even get above that peak B right there. That was at the 488-ish area, 480. I'll give you the exact number, 485.54. That was a week and a half ago. And the weekly chart is not looking all that great, even though the 9-period moving average is over the 14. It's being impacted by the semiconductors. And you can see, look, semis are down 9 points at 234. Not good. Starting to fail. And that just tells me that I've got to be a little careful here about the overall market, even though we've had a rotation. Look, Caterpillar's down today, but it's done very nicely. Not close to all-time highs, which is 382, but very close to the 369 high that was made back in July. It did get to the 359 level, so it's pulling back. Now, let me just get to something else that's also quite important. IWM, the Russell small caps, holding well, down $1.47 at 218.63 right now. That just says to me that it's acting well, but there's no leadership here, but it is a nice recovery for the small caps. Hey, we'll go to gold. The gold is down sharply, down 14 at 2513. starting to fall. There's a chance that this will not be a B. This will turn out to be an F at that peak because of the turn down. But that 9-period moving average over the 14 is still strong. MACD did turn down. Stochastics now under 80% to 66%. So I'm watching gold, but it's really at a high level consolidation. It's still doing pretty well. Silver right now is also down. Silver is down 71 cents. That's kind of sharp when you think about it. Just let me refresh here. There we go. So that is at 28.43. That's a very big arch formation right there at the Fibonacci 784. Whoa, turned around beautifully, gave an arch formation, turned down. So silver's not acting very well. Let's just go to high-grade copper. There, high-grade copper is very sharply down. Ooh, I showed subscribers to an opening call. Wood, that's the wood is the iShares Global Timber and Forestry ETF. Keeps going in the monthly chart to this trend line resistance, the repellent zone. Keeps pulling back, but still holding pretty well. That's the timber and forestry. I usually put them together. So yeah, wood, iShares Global Timber and Forestry ETF is going to recovery highs, while high-grade copper, and I put them in the same category because that's your international, I'd say, economic strength. High-grade copper is pulling back sharply. That's a big divergence. All right, let's go to crude oil. Crude oil right now is down sharply. It's down 2.54 at 71. I've been talking about this for some time, saying that this is a very important Chapman Wave inside track propellant zone. If we go under it, it becomes a repellent zone, and that just is crude oil, even with all what's going on in the Mideast, it's not doing all that well. All right, let's get to bonds. The TLT trading up $1.26 at 97.74. Very nice. Now that 9-period, see how important this 9-period moving average is? Let me just move this away, this arch formation right here. Now there's a cup formation. Look how sharply on Friday the TLT, the iShares 20-year Treasury bond ETF pulled back. That was really going to the 96s, and now look what's happened. The 9 is held. The green 9-period moving average is over the black 14-period moving average. That retains its strength. And that if we close today somewhere in the 70s area, and then tomorrow have another move up in the TLT so that yields can come down, I would say that's kind of important, at least for me, the way I look at markets. All right, Dow's now down 285. I'm expecting some kind of a digestive phase yesterday. That was a false break to the upside on Friday, just in the very near term. I still anticipate, could be wrong about that we will go to high highs this week for that leg D. Doesn't seem like it right now. All right, a couple of things I want to look at here. Look at the volatility index. And this is kind of a warning to say, don't be too sanguine. This is a rotational market. As some sectors are weakening, other sectors are strengthening. That doesn't mean to say that overall we don't get a slide at some point in the market so the VIX can rally. It's right on this trend line, on this 200-period moving average support right here. And right now it's up to at 17.06. My thinking here is that if the VIX index over the next few days starts to go into from the 17s, goes to the 19s, and closes any day above 21.88. That's the that's an important high that I monitored recently. That's going to really tell us that this market's coming down. I think that could happen maybe later in the week. Right now, I think there's still some internal strength, and we're going to see how that unfolds. All right. I heard Tommy talking about Tesla. I saw a couple of the Tesla, what are they called, Cybertrucks, over the weekend. I haven't seen that many, but over the weekend, suddenly I saw 3 of them. One was at the Museum of Fine Arts, and I'm saying to myself, that's very interesting because it is a work of art, even though it's not a work of art that I happen to particularly like. I don't like those jagged angles. I like round. So this is not to my liking, and it is huge. I don't know how these people parked in downtown Boston. I saw one downtown Boston. Where was it? Boylston Street? Yeah, downtown Boston. And I'm saying to myself, wow, how do they find parking? What are they? They are really wide. And Tommy was talking about the repairs. I couldn't even imagine what the repairs cost, because they're an aberration to the norm, that's for sure. Dow's just taken another deep dive. Now it's down 342. S&P's down 51. Basil Chapman sitting in for Tommy O'Brien. I'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yes, so in the den, Jimmy mentioned the EWG, which is the iShares Germany ETF. So it's down quite sharply today, down 0.61%, down 20 cents at 32.43. I wouldn't say quite sharp, it's down a little bit. But look at this leg A. It goes from 29, let me give you the exact figure, 29.28 on the 5th of August. And it makes its first peak. That means it kept making higher. The bar itself, the whole day, the bar made a higher high each day, took out the left side high, made a higher high. Eventually, it made a peak on the 23rd of August. I'd say that's pretty darn good. In the 32.45 range, pulls back for one day and then goes to a leg B. Today, it's a peak B. And it should go to a C and D. Why? Because in the daily chart, look, in the daily chart, it's taken out all the left side highs. So this is a fresh buy signal, upgraded to a buy mode, stochastic at 93%, MACD good. Yeah, the economy might be suffering, but at some point it might show that. Right now, it's not saying that at all. It's saying everything's looking good in terms of the stock market. Two separate things, of course. although they are interrelated, but they can sometimes go in opposite ways. But in the meantime, back at the ranch, this is a leg B and it's a peak B, and it should be going higher in September. I'd say the first part of September. I don't think it'll take too long if it's going to get there at all. And it made a peak D in the weekly chart back in May, the week of the 17th, at 32.75. Pull back very sharply to the 28th, and this last move up has gone to a new high of 32.72. So 32.72 is 1 penny above the previous high, not all-time high, but the high. So that says it hasn't yet broken to a new high in the weekly chart, and that I would call an E/A because it never took out the original starting position at 24 back in September of a year ago. So we're going to go to a break right now. I'll do the news, then I'll do my show, The Tiger Conditions Hour. Basil Chapman filling in for Tommy O'Brien. I just had an appointment, and I said, I'm here, I can do this 20 minutes and then do my show. So the Dow is down 321, S&P is down 56, a pretty serious pullback today.